Hello, good afternoon, and you're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you, and seems like at least the market started seeing a recovery and a good afternoon shaping up on this Monday as well.
Absolutely, a sigh of relief, you could say, coming in for the D Street. A very good afternoon to you, Vinny. And yes, like Vinny mentioned, looks like it's transpiring to be at least a decent enough afternoon when it comes to the benchmark indices, because we've actually clawed back from the day's lowest point now in the positive territory, both for the Nifty as well as Sensex. If you can see Nifty on your screen, we have actually comfortably climbed above that 19,700 mark. Remember, at the day's lowest point when Nifty was, we were struggling at around 19,600 or so. So now we've comfortably scaled above the 19,700 mark when it comes to the Nifty. Let's take a look at what Nifty Bank is doing at this point in time. And Nifty Bank was the one that was playing spoil sport, but that's the one that actually bucking the trend again when you compare it with the benchmark indices. Almost 0.5% uptick coming in for Nifty Bank as we speak. Talking about the broader markets then, it's the small cap index that's taking easy. It is just seeing gains of about 0.3%, while the mid-cap index is seeing 0.5% uptick right now. The advanced decline ratio has comfortably now tilted in the favor of the gainers. So yes, you have more gainers as compared to the decliners at this point in time, which was not the case earlier on the earlier in the day. Talking about now the sectoral indices, then you have a couple of them that are on the negative front, and that is IT, media and pharma. The defense is taking it easy, while on the flip side you have banks, realty, PSU bank index that also that's seen stellar recovery from the day's lowest point. Take a look at PSU bank index actually, because that one has seen the smartest recovery, because at one point in time it was down about 1% or so. So that's the way how the markets are looking like at this point in time. The next 1 hour we are going to talk about a lot of stocks that will be buzzing on in the listed arena, isn't it?
That's a listed arena, but let's first look at what is going to be happening in the secondary market as well. A lot of companies that are opening up with their IPOs coming out, some of them we have already started for subscription as well. What is that whole list? What's happening in the secondary market? Let's go across to Sharad, who's here with the list of upcoming IPOs for us.
In focus, we are having JSW Infra, and this is the company coming in after 13 years from the JSW group. And do remember, this is almost the second largest private port operator as well. Now the IPO subscription opens today, and if you're looking at the details of the company, face values are roughly 2 rupees per share, price band ranging between 113 to 119 rupees per share. Overall, the IPO size is roughly 2,800 crore rupees, and this is entirely fresh issue of shares. Now overall, if you look at the proceeds application, this will be going in for the reduction of debt and also an expansion in certain terminals. Now the management had earlier stated to ET now that the company would actually become net debt free also post the IPO. If you look at the company itself, they are having roughly 9 port concessions and a cargo handling capacity of roughly 158.4 million tons per annum. Now, interestingly, the company's revenue breakup, if you look at it, roughly 65% comes from their anchors, which is their group companies actually making the movement as import for JSW Steel, and the remaining is for third party. Roughly 30 to 35% of revenue contribution comes. Now we did analysis on the EV EBITDA front on the FY24 numbers, and over here the only listed peer they are having is Adani Ports. The valuations looking at it is Adani Ports is coming at 13 times its EV EBITDA multiple on FY24, while for Adani Ports this is coming in at 20 times.
Thank you so much for that, Sharad. But, let's get started with all the stocks that are already listed on the exchange and that are buzzing in trade, either on the back of news flows or on the back of technicals. And on the technical front, today we are joined by Sameet Chavan, while from the research team, we have Ankita as well as Harsh joining in with us. A very good afternoon to all three of y'all as well. And as always, I'm going to be starting with the first stock that's in focus, and let's talk about Glenmark Pharma. We had heard about the news flow that had come in last week, and in terms of that, today we have a brokerage note that has come in from Nomura, where they're actually downgrading the stock to a neutral. They've raised the target price for Glenmark Pharma nonetheless to 841 rupees per share. They believe that Glenmark Life Sciences exit could actually put on some pressure on the EBITDA margins, and concerns remain in terms of the sustainability of the cash flow as well. What Nomura is highlighting is that when you look at the deal valuation, that's at 10.5 times the trailing 4 quarters, and EBITDA is underwhelming as well. So in their view, Glenmark Life Sciences, they expect to deliver mid-teens growth and maintain the margin of 30% ahead of most of its peers in the industry. And Glenmark Life Sciences contributes around 27 to 30% of the consolidated EBITDA and 93% of the free cash flows for FY22 to FY23 when you look at that number there. Now, thus they believe that the divestment will be a negative impact on the margins and cash flows. And Glenmark has also stated that it has intended to focus on the branded branded and complex generics versus the plain vanilla products that are there. So there's a strategic decision to divest GLS, but as of now, on the back of this, a downgrade coming in terms of the rating to a neutral, but target price is at 841 per share. So on the back of this, a bit of a subduedness that we saw coming in the stock, recovered from the day's lowest point nonetheless, but down 0.7% in trade.
All right, so that is Glenmark Pharma that is in focus in today's trading session on the news flow that happened on Friday, and also on the fact that you have a lot of developments that's coming in when it comes to the brokerage views on that particular counter. But let's move on and let's take the next stock then. And the next stock that is in focus is Emami, and the reason why Emami is in focus is the fact that you have MK Global that has come out with a note on the particular counter where they have initiated a coverage with a buy rating. As you can see, when it started the day initially on a positive footing, right now has given up some of those gains. What basically MK is saying that they expect Emami's top line to grow on back of ebbing inflation, as well as the demand recovery in the rural markets will actually aid the company going forward. They are also expecting a high single-digit average and a margin-driven earnings average about 14% by FY 25-26. What they're also saying is that the company has now lowered their dependence on the rural market by ramping up their portfolio in the urban area, which has actually enabled a faster growth in the modern retail channel. They are also saying the company's promoter is gradually addressing concerns about the shareholding pledge, which it aims to reduce to low double-digit, is what the brokerage highlighted in their report. So therefore, you have MK initiating a coverage with a buy rating on Emami and setting a target price of approximately 625 rupees per share. So that's the reason why you have Emami in focus today.
Let's move on and talk about a paint player on the technical front, and Asian Paint Summit. That's the one you've picked out for us. Now, last 6 months, yes, we have seen around a 16 to 17% return that has come in terms of Asian Paints. But what is it that technically it's indicating? Yes, crude price volatility is something that affects the margins of Asian Paints. But on the technical front, is Asian Paints looking strong to you?
See, Vinny, broadly speaking, this stock is in a strong uptrend. Recently, we saw decent price correction the levels of 35.50. Then stock corrected and went into a consolidation mode. So recently, stock prices, underwent some time-wise correction. But the kind of price action that we have been witnessing since last couple of trading sessions, it seems that the stock is likely to come out of its recent, slumber phase. Today, we are seeing a decisive breakout, from the recent hurdles of, say, 3280, 3300. And as we speak, the stock is almost trading at its day's high. So looking at the overall price and volume activity, we expect the stock heading toward 3400, 3450 next couple of trading sessions. So we like this counter. Overall, the trend has been quite, positive. The only thing is the recent consolidation. The stock seems to have come out of its recent consolidation and is likely to head higher. So 3450 is the immediate level to watch out for. And on the low side, if you see 3200 to 3220 has become a very strong base.
All right, so that's the view coming in on Asian Paints. But Harsh, let's talk about Web of Global and this company. Why is this one in focus? It's been a while actually we've heard about this one, isn't it?
Well, yes, absolutely. It's in the news on the back of an acquisition it has made. They have a wholly owned subsidiary in the UK, TJC Limited. And TJC Limited has gone ahead and made a purchase of Ideal World Limited. And of course, through its proprietary TV shopping channel, the company is into tele-shopping, digital retail of lifestyle products, and has a legacy of over 20 years. So that, of course, adds to Web of Global's current dynamic with regard to its business, and of course will probably start adding value later through this year. Also through Shop TJC, they will also acquire the IP rights, broadcasting rights, studio equipment, along with intangible assets as well of the company. And the transaction is going to be funded through internal accruals. Of course, the stock up, alive and buzzing on a tough day of trade on the back of that news.
That is Web of Global for your trading with gains of 2.3%. Let's move on and talk about a private bank and Sameet, the Kotak Bank. Like while you see PSU banks, they have seen a sharp run up. Private banks have not seen as much of a run-up coming in the rally that we saw for PSU banks, right? So is this a turnaround that we could expect in Kotak Bank, and could we expect, these private banks actually to start seeing a sharp run-up?
Well, Vinny, it would be too early to take that call whether, Kotak Bank is likely to move higher from here on. But yes, it is showing some early signs of revival. Stock has been, yes, underperforming stock since last few months. And overall, if you see recently, the private banking space has been sulking a bit. But the today's price action suggests that the 1750, which has been the recent, swing low, stock has tested this important level multiple times in last, 3 to 4 weeks. So today, the kind of bounce back that we are witnessing, across the space, in fact, the broader market has also rebounded quite sharply. So it seems that 1750 is a very strong demand zone for Kotak Bank. And the confirmation would come only once the stock surpasses 1830 on a closing basis. So we would be keeping a close eye on this stock. Yes, the downside seems limited as long as the stock, maintains its position above 1750. But once it breaks out beyond 1830, we would see the stock giving sharp move. And then probably 1900 plus levels, cannot be ruled out. But as of now, 1830 is the level to watch out for.
All right, moving on then, Ankita, DCX Systems. Why is this one in the spotlight today?
Cheryl, DCX system is currently up almost to more than 2.5% now, currently trading at the day's highest point, and it is in focus on the back of the news that Renial Advanced Systems, which is a wholly owned subsidiary of the company, which has its manufacturing unit situated in the high Defence and Aerospace Park in Bengaluru, has received all the necessary approvals and is ready to commence the commercial production of the printed circuit board assembly from 25th of September onwards. And on the back of that, the stock is buzzing in trade, is up more than 2.5% currently.
Okay, let's move on and talk about Jubilant FoodWorks. I think it becomes a favorite, right, when we have one of these QSR space coming in, because me and Cheryl start feeling hungry even more than what we are. But Jubilant FoodWorks, Sameet, what is it that the charts are indicating for this one? 25.3% uptick in terms of gains. Should an investor expect more gains for this one?
Yes, looks like if you have to take a slightly, medium term view, this stock is poised for a good move towards 580-600. As of now, it is, consolidating, which can be termed as a time-wise consolidation after a decent rally from the levels of 470. Yes, this is the stock which is poised for a good breakout. So once this stock breaks out beyond 545, we would see this stock hastening towards 580-85 in the near term. So as of now, if one has to anticipate a breakout, yes, one can certainly look to go long at current level, but one has to keep a strict stop loss below 520, because 520 is an important level, and once this stock breaks below 520, it is likely to negate the recent optimism. So one can buy at current level, keep a strict stop loss below 520, and once 545, 544 is taken out, this stock is well poised for a good move.
All right, that is Jubilant FoodWorks for you. That is in the spotlight. But let's move on to now an ET Now exclusive interaction with the Chief Business Development Officer of NSE, that is Sriram Krishnan. He says that the exchange is batting for extending trading hours and that they had already sent a letter to SEBI with the recommendations a couple of weeks ago. Listen in what exactly he had to say on this.
No, we submitted a request, a proposal a couple of weeks back. I don't remember the exact date, but very much in this month. The idea is to, extend the trading hours in a gradual manner. This is based on the feedback we received from the various stakeholder consultations we held over the last 9 months. And we've taken a bit of time to have these discussions because we wanted to cover all types of stakeholders, not just the domestic ones, but even the foreign portfolio investors. And after a lot of discussions, they have only come up with this suggestion that we should not touch the cash equity segment, but it would be the right thing to do if we were to extend the trading hours for the equity derivative segment. So for a start, we are looking at a session from 6 p.m. to 9 p.m. India time, where we will offer index options and futures. Okay. That's the proposal for which we have requested for approval.
So to begin with, it is only index, future and options, and after that equity consideration might be there, but that may happen in later.
No, right now we are not even thinking about equity because almost all the stakeholders have said that given that there is a T+1 settlement framework in place today, the timelines are too challenging for us to consider extension of trading time for cash equities. So that's not on the table right now for discussion. Also, the overwhelming feedback seems to be that equity derivatives is the right thing to do for extension of trading hours.
Help us understand what was the rationale behind this 6 to 9 p.m. move, because what we were hearing before was that that the trading hours might be extended for 2 hours, I mean, meaning till 5:30 p.m. So is that proposal still on the table?
Well, that is not at the moment being considered for various reasons. One, people felt that when the US opens, that's when we get some global cues which tend to impact the Indian market, just like they impact many other markets as well. So it's important to be open when the US opens. That's why 6 p.m. to 9 p.m. And a mere extension up to 5 p.m. or 5:30 p.m. might not have solved that need. Secondly, I think, to answer your question, the trades of the evening session will be reckoned together with the following trading day. So these trades will be reckoned together with the next day and settled in due course in line with the process for the next day. So that's also something where we are trying to make it as seamless as possible for all the market participants.
Okay, let's move on and keep it going with the stocks that are buzzing in trade. And we have IRCTC that is in focus, and this is on the back of a brokerage note that is from Investec. They're maintaining a buy rating given a target price of 663 rupees per share. What they believe is they see a strong growth prospect ahead and a forecast in terms of earnings to grow at a 31% CAGR over FY23 to FY25 estimate, and with a return on equity of around 42% for IRCTC. They believe a robust free cash generation outlook as well as the net cash position is to grow according to their forecast, and that is why they're positive on IRCTC. And using the discounted cash flow, they are arriving at a fair value of around 900 rupees per share, which implies a 42 times PER, price to earnings ratio, on FY25 estimates, that is broadly in line with the historical average which they compare to IRCTC. So that's why initiating coverage, buy rating, and target price of 663 rupees per share, which is already crossed in terms of that as well. But the fair value of what they're keeping is 900 rupees per share. They believe that the adverse regulatory changes remain a bit of a downside risk, but nonetheless, robust growth coming in for IRCTC is what they are expecting, and that is why I look at the stock today is holding on to gains of 3.3% as well.
All right, and that is IRCTC that is in focus for you. But let's move on. Let's talk about Bajaj Finance then, and that particular counter definitely is the stock of the day in today's trading session. Look at it, 4.5% uptick coming in for that particular counter. The reason why Bajaj Finance is in focus is because the management is all set to meet on October 5th. In order to consider fundraising proposal. There are a lot of news reports floating around as to what the mega fundraise could be, and on back of that you can see the company actually, or rather the stock price actually being perked up in trade today. CLSA, which has a buy rating on the stock, they've raised the target price for Bajaj Finance to 9,500 rupees per share, which is reflecting a strong upside potential of approximately 27%. They're saying that they expect a 10 to 13% book value per share accretion from the fundraise for Bajaj Finance, which will actually keep Bajaj Finance return on equity over 20%. So they are bullish on Bajaj Finance, and also the fact that October 5th is when the board will be meeting to consider the fundraise proposal, and that's why the stock is perked up in trade today.
Okay, that is Bajaj Finance, and that is on the back of the news flow. But on the technical summit, how is Bajaj Finance looking to you? Is it an attractive bet at the current levels of 7,792?
Yes, Vinny, certainly looks like, recently stock has been gradually moving upwards from the levels of 6,800. But the kind of price and volume traction that we are observing since morning, the stock is clearly gearing up for, surpassing its all-time high. So 2021 highs are likely to be challenged quite soon. So stock is well poised to move beyond 8,000. And the kind of trade setup that it is offering at current level, one can buy it at CMP or any dip towards say 7,700, 7,650 would make it an attractive candidate. On the low side, if you see 7,400, 7,450 should act as a very strong support, so which can be placed as a stop loss as well. And the stock is well poised for a move towards 8,000 first, and then probably a breakout beyond 8,000.
All right, so that is the technical view coming in on Bajaj Finance as well. A lot of stocks actually buzzing on brokerage report. I believe Ircon International, Harsh, is that the reason why the stock is also buzzing?
Well, yes, but also they've won a new order, Cheryl. So, Ircon International has executed a contract agreement with Sri Lanka Railways, which is Ministry of Transport Sri Lanka, for the work of procurement, design, installation, testing, commissioning, certifying of signal and telecommunication systems from one station to another. Won't specify the names there, but basically that it's basically an order win roughly of 122 crore. It continues to generate good orders, IRCON, and therefore the stock is also alive and buzzing, 1.5% higher.
Yes, 1.5% higher for IRCON International. Like I was mentioning also, there is an antique report also which has come on IRCON where they've initiated buy coverage with a target price of 176 rupees per share. So they're also bullish on.
Absolutely. They believe that railway, the domination that we're seeing coming in order book also, that is also something that will work out, right, for IRCON International.
Right.
Because a lot of railway orders have been coming in, we've seen across the board. So that is also something that is going to keep IRCON, and that is why that initiation of coverage by Antique as well. But let's move on to the next stock, and stock number 11 for today. Ankita, you've picked out Alchem for us. What's the news for you?
That's correct, Vinny. I've picked up Alchem. It is in focus today because, Alchem Lab and Biosurgeon AB have entered into a co-development and license agreement for the development and commercialization of Biosurgeon's novel polyene macrolide antifungal product, which is called BSG-005, for the treatment of severe invasive fungal diseases. And on the back of that, Alchem is going to be in focus today.
Okay, surely keeping an eye out on that one. Let's move on and talk about Eris Life Sciences as well as JB Chemical. Both these stocks are in focus, and this is on the back of a brokerage note again that we are having it from Spark, where they've initiated coverage on Eris Life Science as well as JB Chemical. And what they're mentioning about the unbranded generic space, which has seemed to have gained volume share, as well as the branded generic in the recent times has also improving. They expect a low single-digit volume growth trend in the IPM to continue, which could translate to a high single-digit value growth on the back of the pricing and new launches as well. And what the brokerage firm is actually highlighting is that in the last few years, the domestic businesses of larger Indian pharma companies have grown marginally above the IPM, and they expect this trend to continue, which would benefit Eris Life Science as well as JB Chemical. That's why initiating coverage on both these stocks. For Eris Life Science, it's a buy and a target price of around 1,040 rupees per share, while for JB Chemicals also a buy rating and a target price of 1,625 rupees per share. They believe that these are two mid-sized domestic companies which can outperform the IPM materially and unlikely to most of its similar-sized peers. Also, they believe that these two stocks could do well in this space, and that is why look at the uptick we've seen in both the stocks as well. Recovered from the day's lowest point. Eris Life Science up more than 1.6%, almost 1.6%, while JB Chemicals is up 3% in trade.
All right, so another set of stocks buzzing on back of actually brokerage report. But on that note, we slip into a break on this edition of Market Fatafat. More stocks to discuss on the other side. Don't go anywhere.